Welcome back to my YouTube channel. Today I'm going to take you through a very interesting company in the subtitle Company Corner, and the company name is ALKYL Amines. This company gave 8 times return in 3 years between 19 and 21, and last year it has corrected around 25-30%. So let's move and see, is it worth to invest at this point in time? If you are having investment in this company, should you hold or sell the stock? And therefore my request would be to stay connected and see the whole video for a proper analysis, because the idea of this video is imparting analysis skill in the investors, and I hope seeing this you can do your own analysis for other companies which you might be thinking to invest in. And if you do it, I can guarantee you one thing: although a stock market is very risky, you must do a proper research or consult an advisor. But if you follow this method, chances are that your losses will get reduced drastically. That is for sure. So let's get going. So ALKYL Amines Chemicals, this company is a leader in aliphatic amines production in India, and since it was having a leadership position, it has a pricing power. The shares really did very well in last couple of years, and stock P is 62.4, which is very high normally for a specialty chemical company, and book value is 210. ROC and ROE both are very decent, actually 25.2 and 33%. FI holding is 2.3%, and DI holding is also less, actually, not very high. So when you look at the sales growth in 3 years, sales has grown by 22% in 3 years, and 5 years 25%. So sales have been growing at a very decent rate, and debt to equity is almost close to zero. PEG ratio is 1.79, 1.79, and profit for 5 years have grown and at about 34-35%. And this company has been producing free cash flow. So these all symptoms tell you that this company is an excellent company for investment. Now let's look at the return curve. As you can see here, starting 2000, sort of sometime here in 2018 November or beginning of 2019, and the peak was, let's say, 30 July 21. So in 2.5 years, the share price multiplied from about 450 or 400 to 4,382. So almost 9-10 times in 2.5 years, and that was a fantastic return, and it attracted a lot of investors in the share. Since then, during 22, the shares have been falling, and if you look at this is trading below 250 days moving average. So if you go purely on a layman basis, which I have been advocating many times, this price one can invest, because this is almost 30% fall from the 35% fall from the all-time high, and share is available at about 2790 on last Friday or yesterday. So what you should do on Monday, that's the whole idea. And for doing that, let's remain glued to this video and see till end. So this analysis has been done today, and if you look at the EPS growth, fantastic growth. As I told you, in 2.5 years, there was a jump from about 12 to 55, 58 EPS, and since then it has seen a down trend during the COVID period, and it is then sort of flattening. And so is the case with OPM, operational profit margin. That also has very similar pattern here, but sales have been growing. That is the good news. This means company is under pressure of margin, and therefore EPS has declined. So significant fall in acetonitrile price. This is the finished good of this company, where they had almost a monopoly position in India. Now competitors have started coming in, and the nearest competitor is ramping up in terms of the capacity. So the raw material prices had not fallen in the same ratio. So obviously there is a margin pressure, there is a competition pressure of the company. When you look at the cash flows, normally what we do is we add up the operating cash flow and investing cash flow, and then we see these all numbers should be positive. So in this case, quite a few cases, 3 to 5, 6, 7, 8 out of 11.8 points are positive. So good, reasonably good from that perspective. In terms of ratio, this company, if you look at the cash conversion cycle, that has been declining continuously. And from 170 days to 25, now it is 36 in the current year. So it is a significant cost control. The company appears to be having a complete hold on its operational parameters, and therefore the debtors, the creditors, it is able to control a lot. When you do the comparison with the PE, very interesting. The first thing I like to tell you, there are two amines company I have put here, ALKYL Amines and Balaji Amines. Now if you look at here, this is trading at 62 times PE, whereas Balaji is just 22 times. So almost 3 times of Balaji Amines this is trading. In terms of market cap, this is 14,000 and 9,000. And when you look at the numbers, the basic decision numbers, ALKYL Amines is not number 1 at this point in time. So almost all either second or third position in the competition list. So that is not very good signal in my opinion. So if you look at valuation advantage, which was due to huge growth in previous years, that seemed to be vanishing, particularly due to pressure on the margin and also growth of competition. So these two are really troubling the company. When you look at the attractiveness of the company, how attractive it is, if I go purely through 10 years price pattern, it is trading below both 250 DMA. So therefore it could be good from this perspective. But when you do a further taking a deep dive, you will find a very different story. So if you look at the P ratio over here, P ratio for 5 years, as you can see here, it is trading higher in 5 years, and 3 years also it is higher, 1 year also it is higher. And when you are looking at the PB ratio, price to book ratio, this is lower, this is higher for 5 years, 3 years, and also lower for 1 year and lower for 3 years than the period. So out of the 6, almost 4 parameters is against the company and only 2 parameters in favor of the company if you go with this check. Therefore friends, so if you look at here, you get a very different story. And as I have said here, this is actually high over here. So you see only a very different scenario over here. So from this perspective, one can take a sort of middle of the road approach. Either one can buy or sell that way or hold. So it's not very clear from that perspective. And when you look at the broker's recommendation, it seems to be like Motilal Oswal has been following this company and continuously since last last 6 months, it is neutral on this particular company. Whereas SDFC, this is a little dated one, in 22-20 it said buy. So target price of 33-35 looks like. So this was achieved and then it retreated. So SDFC recommendation one can ignore because these 3 recommendations are dated and the current recommendation from Motilal Oswal is neutral. Now when you look at the FI holding and DI holding, although the holding is static, like it has not changed significantly, but relative holding percentage of both FI and DI are not very high. This means that this company, although performed very well in couple of years, but these guys were not very gung-ho. Normally they didn't go in second digit, like 2 digits. More than 10% I consider very exciting if you have DI, FI put together investment in any company. So therefore, from that perspective also, this company doesn't give you a lot of confidence for investing into the share of this company. Now, when you try to sum up the whole situation, margin is under pressure, as I mentioned to you. It's still expensive. Current situation does not justify the high valuation. Even today, excellent cost management. That is all credit you must give to the company and not much scope for short-term, medium-term growth. So when you look at this company in totality, it looks like although it's leader in amines production and China situation, If China detonates by some point, it directly helps this company. But other difficulty is that in India, there is a competitor which has come up very well and is putting a challenge to this company. And if you compare the valuation of this company, it is very expensive compared to the competitor, and its relative performance in terms of ROC, ROE, net profit margin, gross profit margin, sales growth and profit growth vis-a-vis competition, it doesn't justify the high valuation. From that perspective, if you are holding this, if you are having this share in your portfolio, you may like to hold it. For new entrant, my feeling is that in range of around 2700, one can take a sort of limited exposure and try booking profit at about 3000, 3400, it maximum goes up to. Long term, if you hold, believing that amines will get the significance, then it has to be a very long term investment, friends. From that perspective, I am not very excited on this particular shares at this point in time. Although I am having this share in my portfolio, but I plan to hold for long term, because at the current price I have incurred some loss and then I need to continue for long term. So friends, I will not suggest you to make a huge investment in this share. You can take a limited exposure at about 2700 price, and if it goes and make some 10%, 12%, 15% profit for you, you can start booking some partial profit. By doing that, you can make some money. But this is not very exciting at this point of time from short medium perspective. And from long term, again, there could be uncertainties in terms of competition coming in and China's situation. So thank you very much for your time today, and I hope you like the video. If you liked it, please do circulate amongst your friends and colleagues and relatives using social media like Instagram, LinkedIn, Twitter, Facebook, WhatsApp. Thank you so much for your time, and see you in the next session.